Hi all, this is Ashish Kyal here. Welcome again to Elliott Wave News channel by wavestrategy.com. And we have seen some highly volatile move in this week where Nifty has been all over the places. It went to as low as below 10,400 and then moved back above on the upside and now trading around 10,800 odd levels. So we have seen all the way on the downside and then back on the upside. So there has been a strong move and a very high volatility. But if you remember my previous webinar, the entire movement has been contained within a range. So we can clearly see that the entire, if you remember, I told very clearly, there is going to be a volatility, but we might end up moving in a range. So what has happened is Nifty has moved in a broad range, in a very big range, in fact, but it has not gone anywhere. So if you compare current where the prices are currently, it was exactly at the same level in the previous week, and we are again at the same level despite of all the event which has happened, despite of RBI Governor Urjit Patel resigning, a huge news or event. At the same time, BJP losing in all the states, again a very big event, but markets reacting positively. So that is how market moves. If you try to apply logic to the movement of the market, you are probably going to lose a fortune, and many people probably did that when Nifty had a huge gap down opening on Tuesday around the zone of 10,400 and it broke below that level. Many entered short positions near 10,350 just to see it reversing back on the upside very sharply on the same day and moving higher again. So we have been expecting this kind of a behavior on an event, and when a news or event is something very commonly accepted and everyone has agreed upon that market has to move lower, there is nowhere else but to move lower, then the markets will surprise the majority. That is what we have seen in the past. In the history, if you go back and check, there was demonetization which happened in November 2016. Post that, again there was a huge euphoria on the down, a huge pessimism on the downside. We saw demonetization, we saw Trump victory, and see what happened after that. Even after that, there was a huge move on the upside again, despite of all the pessimism and what everyone was expecting that the US will collapse if the Trump comes into power, and we saw a huge run up in Dow Jones Industrial Average. So news or events will not drive the markets. It is rather the markets which are leading the events, and that is what you have to understand clearly. So many who are trying to find out logical reasoning for the market movement based on the event will not be able to do so. And now people can come out and say that since BJP did not lose much of the seats in Rajasthan, that's why the markets are stable and we saw a pullback. That is something which is a post-mortem. You can do it after the event, but for a trader, how does it help? The only thing that I have observed works in the market are the patterns, Elliott wave patterns, Neo wave patterns, or probably some other patterns that you might be following. And those patterns keep recurring again and again. And that is based on those techniques. I have been expecting that one leg on the upside is pending, and it has worked out brilliantly well. In our monthly research report, which was published again on the 7th or 8th of every month, was clearly showed the path that Nifty should follow. We should come down on the down, we should show a push on the downside, which we saw. Then again a push on the upside back towards the level of 11,000. We are very close to it, back again on the 11,000 mark. And now everyone is again just trying to understand where are we headed from here on. Let us now go back on the chart, try to understand what are the patterns suggesting, what is the Elliott wave pattern suggesting. Are we really headed for that 11,000 mark now, or is it time to again get cautious? So we turned bearish near 10,940 levels. We saw a huge crash on the downside below 10,400. We started turning bullish as soon as the gap was filled on Tuesday, and we again saw a huge 500-600 points rally already on the markets. So the entire pattern has worked out very well, and we have been mentioning it in our daily research report. We have been providing the intraday positional calls to our subscriber based on these methods that we have been using, and it has worked out extremely well. So let us now try and see on the charts what is the overall pattern which we can now see, and where are we headed from short-term perspective. It's not going to be an easy move over next week because we are again starting the distribution process. And if you understand distribution is the process where we are going to see markets now not doing much but probably drifting higher. That is what it looks like. It's going to just simply drift on the upside. So this is the chart which I have showed in the previous week, where you can see an expansion which is happening on the upside. Similarly, we can see an expansion which is happening on the downside, but no meaningful trend as such. So there has been a volatility, and in the monthly research, I very clearly mentioned we are going to expect some very high volatility, but the overall movement is going to be range bound, and that is what exactly it has happened. We are seeing a huge volatility on the upside when Nifty rallied back towards 10,940, downside again back towards 10,330 odd levels, now back towards 10,800. And mind you, these movements have been happening in just three days of time. It's not taking a complete week. In just 2 or 3 days of time or 4 days of time, you are seeing the movement on the downside back on the upside, and people are simply guessing now where it's headed, because they are not understanding that the overall pattern we are seeing right now is the form of wave B. So we saw a huge move on the downside from 11,800, 700 odd levels. We came down towards the level of 10,000. Post that, what we are witnessing right now is wave B on the upside, which is ongoing. And that is why this wave B is consuming so much of time, but there is absolutely no price movement. It has retraced, hardly retraced 38.2%. If you look at the truncated low, I am looking at truncated low because this is where wave A completed. Post its completion, what we are witnessing now is an expanding kind of a behavior, and this expanding behavior, if you can connect these lines, you can clearly see an expansion ongoing, and that is why we saw a move on the upside, which was wave A, then wave B. We saw again wave C, wave D completed. Now on the downside, we are in wave E. So there are two patterns that opens up right now. One is the diametric pattern. If it's a diametric pattern, we will start seeing contraction, and that makes a lot of sense because currently there is a lot of confusion among the traders, and this is going to result into a contraction behavior. We are not going to see a very strong trend, but a contracting behavior. So we might see some push on the upside, then again on the downside, and then again upside, which will complete the entire wave B, and then the downtrend is going to resume. So there is a very high likelihood we might eventually break the level of 10,000 on the downside. I don't want to sound extremely pessimistic, but if the support levels break now, then we are not stopping. So we are going to mention these key support levels on Nifty in the daily equity research report. You keep a watch on that. It's going to be a consolidation phase. We are not again going to start a very sharp down move. I think we are going to have some consolidation phase. We might drift higher on the upside, and then probably after drifting higher on the upside, I'm going to keep a very close watch. If we are able to break that zone of 10,850, 10,900 with momentum, then yes, the rally might extend. But if the diametric pattern has to be valid, we are going to see a consolidation over next week, and that consolidation will eventually result into a negative breakout. We are going to keep a close watch on how the market moves over next few days, and it is very crucial. You might get an amazing trending move after after next few days, and you should keep a watch on the stocks as well. So not all stocks have participated in this rally. Look at the metal stocks; they are still struggling on the upside. Look at the other stocks like BAIL. Look at banking stocks like ICICI Bank to an extent. So those are the stocks which have still not done anything, and they are just lying near the lower end of the zone. So once the reversal happens on the downside, the stocks will start collapsing again. So do not buy into this kind of a rally from the short-term perspective. You need to be very, very accurate with respect to the stop loss you are going to apply. If you would have bought at the lower end, that would have been okay, but getting in the market now for 5-6 days horizon is going to be very tricky. So my suggestion would be form a short-term trading strategy, probably from 2 days perspective or 3 days perspective. You should do that on the index and trade based on that short-term moves that you might get. Keep booking profit as soon as possible so that you are not caught off guard and you are able to trade the markets even if Nifty reverses on the downside. You should be open to change your stand very quickly in this kind of a market if you are very much adamant on one side of the trend, and if reversal happens, you might be doomed and it is going to be very, very emotionally challenging. So you should be very quick. As soon as the gap area over here, you can see the gap area which was created on the day of 11th of December. As soon as that gap area was filled during the day, you should get the clue that something low has been formed and Nifty is reversing back on the upside. It's not going down. On 11th morning research report, I mentioned if 10,400, 440 zone remains protected on the closing basis, we are not headed lower, but we might again start the up move, and this is what Nifty has done. So despite of the event or the news, the movement has been extremely accurate. Even if you apply a Fibonacci series and try and gauge the overall retracement of this up move, it is exactly 61.8%. So despite the event, 61.8% Fibo worked out brilliantly on the charts, and we saw a reversal happening from 61.8% area. To concise it, the entire analysis, I would suggest there is a possibility in the coming week we might start seeing some consolidation. The swings are going to be still big enough. We might see some 200 points down move, 200 points up move, and then slowly the movement is going to reduce. The consolidation should take place. Once the consolidation is over, the trend should resume. I will be very clearly mentioning all of these things in the Monday research report. It's going to be very important how we start the next week on the Monday and where do we close the week. So it's going to be very important how we trade in the next week, and post that we are going to get some amazing trading opportunities again. The global markets also look to be in sync. Dow Jones looks to be in sync. So this is the time where everything is going to be in synchronous moment. So for short term, keep an eye on the key levels, which is going to be mentioned in the daily research report. That's it from my side, and stay tuned. We are also starting with the momentum research report, which is going to be showing short-term trends of the stocks, where to enter in that stock, what should be the target, what should be the stop loss. The stop is going to be in the range of 7 to 8%. The targets in the range of 12 to 15%, because there are a lot of queries for those kind of research. I'm going to start with that research report. In case you want to subscribe to it, you can always reach out to us on helpdesk@wavesstrategy.com or call us at 99-204-22202. You can also visit the website wavesstrategy.com and get detailed analysis on various stocks, Nifty, intraday advisory. Equities have been doing brilliantly. Commodities have been in an amazing trend. Gold and silver has done exceptionally well. So you can even try and look at commodities, how that asset class has been doing as a whole. So you can get access to the intraday positional advisory, and for that you can visit the website or contact us on the number I just gave now. Thank you very much, and hope this webinar helps. Take this as a learning perspective. Do not act just on the webinar. It's a free content, and for detailed analysis you can get access to the daily research report, the monthly research report, and the momentum research for the stocks that you think that we think are going to probably outperform in this market, and from very short-term perspective. Or you can also look at the multi-bagger research in case you would like to create your portfolio and use this correction as the buying opportunity to create a long-term portfolio, so that the stocks will eventually outperform over next 6 months, 1 year, 2 years, 3 years time horizon. This is the right time to keep nibbling out on those stocks, slowly and steadily keep building the portfolio, and when the trend reverses back on the upside, you are going to see some amazing move and growth in the entire portfolio. That's it from my side. See you again same time next week. This webinar will be available on wavestrategy.com at 5. Have a wonderful weekend.